what I'm seeing here with the stock market and recent stock market behavior. And so what I'm going to do is I'm going to send a text out to the rest of the tribe, let them know what we're up to, and invite them in. And if you have questions and you'd like to ask those questions, please put them in here. Make sure you hit the thumbs up button and subscribe. We have the Black Financial Channel. The Black Financial Channel gives daily financial news and commentary from a Black perspective. This is what we need in our community. We need more financial conversations because we want to be in on the great financial game. We know from people like Dr. Claude Anderson, who train us on topics like powernomics, that we live in a world that is built on global economic warfare. And so I encourage you to be alert and be aware of what's happening. This is a big week. This is a big week. It's a very scary week, for stock market investing, or it can be seen as a week of tremendous opportunity. There is a lot happening in the stock market right now. It's going crazy. I mean, today, in fact, you actually had the triggering of what is called a circuit breaker. And a circuit breaker is basically, it's kind of like if I heard a relationship therapist who said that when you get into a fight with your girlfriend or your wife or your husband or your boyfriend, that there's a point where, you got to call a timeout. You got to stop and walk away, go to your respective corners, because if you don't do that, then you're going to say something you regret because you're reacting in a hyper emotional way. So effectively, the circuit breaker is basically a mechanism that is designed to keep the market from overreacting. The stock market has, according to most research, and I did a lot of this research when I was working on my dissertation, most researchers will tell you that the market is prone to emotional overreactions. There's a debate in academia over whether or not the market is rational or irrational. I'm going to say that there's a lot of irrationality there. I'm also going to say that my opinion had always been that media can drive some of that irrational behavior. Now, again, if I were sitting in a room with other academics who've done research on this topic, there would be a healthy debate. There are people who spent years when I was in grad school trying to convince me that the market doesn't overreact to things like, news media and stuff like that. And I just never believed it. It just wasn't. It's almost like the difference between being a Catholic versus being a Jew versus being a Christian. There's just stuff you just say, look, that's not what I believe, and that's what it is. You can show me proof and evidence, but there's a certain point where I'm just going to say, even though I can't prove it, I still am not convinced. And so effectively, the biggest culprits right now in the market, and I'm pulling up my phone here because everything keeps changing by the minute. And so the biggest culprits in the market appear to be oil prices. The Saudis and the Russians are fighting over oil. Basically, the Saudis, I guess, tried to, the Saudis are pretty gangster with it. So they were trying to push the Russians to participate in an OPEC agreed upon. OPEC is the Organization for Petroleum Exporting Countries. And they were trying to get the Russians to join them in restricting the supply of oil to boost the price, because they felt that due to the economy sort of slipping from coronavirus fears, not the coronavirus, but coronavirus fears that are slowing the economy. Let's just be clear. It's not the coronavirus that was slowing the economy. It was the fear of the coronavirus that was doing it. So the biggest problem in our economy right now really is fear. So the fear of the coronavirus was leading to an economic slowdown, which was going to affect all the all the oil exporting countries. So OPEC said, hey, let's all just agree to restrict supply so that, we can keep our prices up and, and stuff like that and make more money. Well, the Russians were like, no, we're not with it. We're not with it. So the Saudis went out and just basically said, okay, you want to do that? Fine. We're going to go home and we're going to produce a ton of oil and we're going to murder the price of oil. So the price of oil dropped by about $11 a barrel overnight, which is about 25% of the price, if I'm not mistaken. And so the Saudis, so really instantly the global economy felt the shake. It's like, two big 300-pound guys who are arguing with each other, about something, and then one of the guys just goes and tackles the other one, and then the whole building shakes because two big gigantic men are fighting. So the Saudis and the Russians got gangster with each other. The Russians said, we're not participating. The Saudis said, okay, fine, we're going to ramp up our production and we're going to drop the price, and we're going to hurt ourselves, but we're going to hurt you even more. And so now you're feeling that effect all throughout the world. The entire global economy rocked. All the markets around the world were rocked. American oil companies were body slammed by this. So many of those companies, and this is a scary thing because what I'm seeing, if you conjoin, what's going on with oil with what's also happening with the coronavirus, I'm starting to worry that we could get to the point where the banking system, the American banking system, is impacted by this crisis, where the American banking system could get to a point where, a lot of highly leveraged companies, particularly in the energy sector, can't pay their debts back. And so when Peter can't pay Paul, then Paul can't pay Mary, Mary can't pay Joseph, Joseph can't pay Jesus, right? So at the end of the day, that's how you get that domino effect, which pushes us into that territory of the 2007-2008 financial crisis, which really was a legitimate crisis. And now can this actually go into, I had a friend that asked me today, if this could actually spin off into a Great Depression. I'm not going to go that far. I'm not going to go that far. There are a lot of factors that contributed to the Great Depression. You didn't just have fear. Remember, I told you guys how fear is something to be afraid of. You had, in addition to fear, you also just had flat out stupidity. You had bad policy that actually contributed to what happened in the Great Depression. So I'm not gonna. So if you think about this, I mean, if you're scared, then that's going to be bad. But if you're scared and stupid, then that's going to be even worse. And so that's kind of where I would draw the line between what we're seeing here, what we saw in '08, and what we saw in the 1930s. Now, do me a favor, guys. Let me know if you can see me and hear me. If you're watching this live, give me a yes or no if you can see me and hear me okay, because I know my Wi-Fi just went out and I disappeared for a second. So I don't know if I'm back or not, but give me a yes or no if you guys can see me and hear me, and I apologize for the fact that my internet is stupid. So do me a favor, hit the thumbs up button, hit the share button, hit the subscribe button. If you haven't done that yet, please do that. Also, if you want to check out my stock market investing class, you can go to theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. Okay, guys, so let me type in here, can you see me now? Okay. All right, so maybe I'm back. I hope I'm back. If I'm not back, then I'm just gonna keep talking, and I'm recording this, so I'll just load the recording a little bit later. And I hate this. This is so irritating. So okay, let me see. I'll load the recording afterward. Sorry for the technical difficulties. Okay, so what I'm going to do is I'm going to keep on doing this analysis, and I'll just load the recording. And I don't know why the internet gods want to screw us over right now. But anyway, so basically you got the issue with the oil prices kind of being out of control, dropping at a dramatic pace. Then you got the coronavirus. So in a way, it's sort of like you're having a double whammy, triple whammy effect that's occurring in the stock market right now. And so, if you compare it to like a cancer, right? A cancer, if you have prostate cancer, that's bad, but it's not the worst kind of cancer. But if you got stage 4 pancreatic cancer, then that could be a real issue. So effectively, what you're worried about, or what you want to watch out for, is seeing the banks hit really hard by the crisis, because the banks provide a lot of the liquidity and the financial fuel that stimulates an economy. So the biggest concern I had about the oil crisis is that it hit the energy sector, which then hit the banks, which caused bank stocks to just plummet, which also says to me that that it only enhances the fear, which is actually driving people to move their money out of stocks into treasuries, which is dropping treasury yields to an incredibly low rate. Actually, treasury yields are below 1% across the entire yield curve, as they call it, which I talk about in my stock market class. So I'm not going to go into all that detail now, but feel free to check it out if you want to learn more about that. But basically, we're kind of hitting this really historic territory. The yields are down, not just because money is flocking away from the stocks into other areas. In fact, it's not just flowing out of stocks, flowing out of crypto and everything else into bonds, but also they're anticipating that the Fed is going to step in and do a reduction in the interest rate, which they're anticipating that to be 75 basis points. There's a 25% chance, I believe, that it's going to be as high as 100 basis points. So that's going to be something they're going to try to do. The medicine's coming, but I don't know if the medicine's going to work if we're sick up here, meaning that the amount of fear caused by media and the coronavirus conjoined with the fear created by what's going on in the energy sector and how it's impacting the banks could cause some damage that goes beyond the actual literal damage being done by the oil shock and by the coronavirus. So, when they say that we have nothing to fear but fear itself, that would be the kind of best way to kind of look at what's going on with the economy right now. And I'm looking at my phone and it says the Dow plummeted about 1,800 points. What will be interesting to me is if the Saudis eventually shut down what they're doing, their attack on the Russians. And if the Saudis were to sort of reverse course and sit back down at the table with the Russians, or if the Russians were to say, okay, we quit, and then they were to prop up the price of oil again, I wonder if that would help. But I don't really know. I mean, sometimes if you do things, you can do things that you can't quite take back, things you can't really reverse. And so I'm really curious to see how things evolve in the near future. I know that we're going to continue to be bombarded with coronavirus headlines. There are people like Dr. Drew who are saying that we're overreacting to it. I tend to agree because from what I understand, the mortality rate isn't much higher than the flu. But does that mean that we can't go into another Great Depression? Well, we're due for a correction already. We've had too many good years in a row for us to think that the good times are going to keep on rolling. But I think that there might be some things that can be done on a policy level to mitigate this. But I don't really know if right now, if Trump is the right guy to be leading the country during this time, because he's not the best leader in these situations, especially when we talk about the coronavirus. I think he's fighting with the CDC and the Health and Human Services office over even how they're even talking about the virus. So it's going to be interesting. I'll keep you guys posted. Make sure you subscribe to theblackfinancialchannel.com, theblackfinancialchannel.com. I'm going to keep giving you updates, so keep coming back to the channel. Also, if you want to check out my stock market class, feel free. I think this is a great time to learn about investing. If you want to know what I'm doing right now with my portfolio, I'm buying. I'm still buying. I buy the dips. That's just always been my policy, my strategy. I remain consistent no matter what's going on in the economy. And so I'm buying. I'm buying lots of stuff. But that doesn't mean that I'm going to make a ton of money from it in the short term. But long term, that has always been the best strategy. So feel free to hit the thumbs up button, share button, and subscribe button. Also, I'll be in Atlanta this week with Andre C. Hatchett. So if you'd like to come to the Atlanta event, go to drboyceatlanta.com. And then I'll be in Hanover, Maryland. And that URL is springintowealth.com. So I gotta go, guys. I'll see you soon. Have a great day. And sorry for you guys that were watching live. I don't know why the Wi-Fi went out. I'll just hopefully this